Hey, great tweets. Thanks a lot, guys. So you're putting the pressure on me. I know you're ready to make some money. Here's my stock suggestion for the day. QIHOO 360. The company's core business is internet and mobile security. Amazing execution, though. The company really has been coming through with respect to earnings. They always beat the street. Right now, in fact, Wall Street's looking for annual growth about 40%, 19% for the industry. In China, they're #1 in browser, mobile, app store, and they're #2 in search engine. Now they want to go global. They had a big thing in Barcelona here recently. Let's take the last quarter, though. Revenue is $265 million. That was up 141%. The net, $73 million, up from $17.5 million a year earlier. And their earnings were phenomenal, 54 cents versus 14 cents. So how did they get there? Internet users were a record, 490 million. Smartphone users, now this is where they really exploded, 538 million from 275 million. This is just year over year. Now, the street's been sort of hiking the earnings estimates on it. I still think it's too low. I will add the caveat, it's extraordinarily volatile, but I'm looking for it to go back to at least $124 a share. And joining us today, NewOak Capital President Jim Frischling. Jim, we brought you in to beat me up on this bad boy. What do you think?
I'm going to take a shot at beating you up a little bit, but for the most part, I like your pick. And I wish I could take a contrarian view, but we do like all things mobile right now. We are liking what they've done in search. Their market share is up over 25%. Headwinds we see, first of all, competition is fierce, and they're in a spending war, and when you're fighting the likes of Alibaba and you're fighting Baidu, their margin's going to be a little compressed. We think that's a headwind. And we also looked a little bit at the regulatory environment here in the States. Chinese-based internet companies, not in vogue right now, but again, we think they'll fight through it.
But what about the conditions in China? Does that worry you? A lot of people don't want to touch anything based out of China. They simply don't trust the numbers.
No, and I think in the U.S. we watched Alibaba struggle with their IPO. At least SEC wants more disclosures and this whole offshore issue. So again, I think that is an issue. And when the congressional report is spooking U.S. investors saying major risks, I think it's an easy thing for people to say we're going to turn away from it. But again, we actually disagree. We like your pick. So my first appearance, I'm in your camp.
Here's the thing, Matt. Some people say there's an American word that doesn't translate to Chinese, accounting. I disagree with that, but anyway.
Yeah, but that's the reason I think it trades at the valuation is. It's got a peg just below 1, which is very attractive in my opinion. You talked about earnings earlier in the show. They had earnings 2014 of $2.44. In 2 years, it's supposed to go to $5.38. You can't find much growth like that in the United States. I think it's high risk. I will say this, though. If you can't handle this, there's a Crane Shares Chinese Internet ETF, KWEB, which has this in the top 5 holdings.
I got to go, but do you like it, yes or no?
I do.
You do?
Yes.
That's all I needed to know. All right, just staying for the